Hey everyone, John Henry here, slingshotfutures.com. Welcome to the daily futures market outlook for tomorrow's trading. Tomorrow being the 9th of the month, going on Friday. Plenty of price action, lots of stuff going on. Just came off the backs of President Trump speaking on tariffs and all of that kind of stuff, so the market's got a little bit shaken around here going into the end of the day, but plenty of stuff to cover. So before we jump on in, make sure to swing it over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. From there, you're going to be able to sign up for our daily email and newsletter list. You'll be notified every time one of these videos comes out. But along with that, in the newsletter, we talk about a bunch of stuff that we don't have time to talk about in the video. And that's going to be everything from stocks, options, crypto, you name it. It'll show up in there at some point if it looks like a potential area, a thing of interest, an area, a market, whatever. So make sure to sign up for that so you don't miss any of those ever again. Now, along with that, don't forget to click on the live trade room subscription and trial info. From there, you can sign up for a free 3-day trial in the live trade room, so you can check us out for a couple days and see what we're all about. It's a really good way to kind of hang out with us for a few days in the room, can see what we're looking at, how we're trading, ask some questions, and just a generally good way to kind of see what we're all about. So make sure to sign up for that if you haven't done that already as well. Now, taking a look at the markets, well, the euro caught a little bit of a sell move down. Now, the sell move down came in a little bit late, and we can see that a lot of that movement happened on the early morning news out of the ECB. This morning we had news at 7:30 and 8:30 with the ECB press conferences and a bunch of different interest rate stuff. They all came out as expected, but the market didn't so much like that. So pretty big bear move to the downside, huge 4-hour bear bar, and it does have continuation further. So we are seeing a decent amount of sell signal, strength lower, and sellers apparently, well, they weren't too pumped about these prices. You know, these earlier levels of support and resistance on the wedges, they held really well. Normally, as you go further and further and further away, people start kind of forgetting about those wedges. That wasn't the case this time around. Man, we popped the inside of that wedge top and just collapsed all the way back down. So a huge amount of bearish pressure to the downside, and every single one of these bear bar, bear bar, bear bar, bear bar, back to back to back all the way down. And with that amount of bearish strength, generally speaking, you're probably going to see a little bit of extra follow through. Now, that extra follow through usually means one more leg to the downside after a correction. We haven't even had a correction yet. There hasn't even been a pause. It's just been straight down. So eventually, probably in the overnight session, we're going to go sideways for a little while, and the market will kind of find some balance, maybe a little bit of a lift higher for a trap, and then back down we go. So the anticipation going into the overnight session is downside weighted, quite heavy, even though in the long run, this may easily just be that little trap swing low we were talking about. With this amount of bear pressure, I still have to assume there's going to be more bearish pressure than there are bulls trying to stop it, and that means that I'm looking to sell in the overnight. Now, the overall downside objective is going to be getting back to that 22,545 area as support, and then from there, we can kind of play it by ear and see how the market wants to respond. You know, if we get a big failure candle like this off of that 22,545, it'll be pretty obvious in what the market wants to do, but we'll have to wait and see once we get there. Over on gold, we did come back, and guess what? We tested that break-even point, and oh, guess what? It bounced. What a surprise! I would have never guessed and never saw that one coming. That break-even point that we've been talking about at 1320.4, a lot of sellers likely sold into that move, trying to drive that market down. That failed. It didn't go in their direction, popped right back up. They were able to sell into some of these other corrective areas here, getting more or better pricing in this case, selling at a higher price, and they look to exit everything at that original entry point to scratch this one off the table and take a really nice profit off of that one, and well, we had a pretty strong bounce right there. If we zoom into something a little bit faster, like a 15-minute chart, you can see that that area was no joke at all. Now, I'm not saying that we're done with the level, but the initial test right here, that's the big one. That's where everybody who had those pending limit orders there to get out, that's where they're out. And you can see the biggest reaction that we had was on that initial test. From that bounce point, if we measure this up a little bit here, we can see that from that area to the kind of peak high that it made right there is about 26 ticks. So there were so many orders there that just on the initial test, it bounced up about 26 ticks before it finally kind of rattled around a little while to where we are now. So definitely a big area, that key area of interest, and that is now done and gone. So we no longer have to worry about that. At 1320.4, major area was tested and major area is complete. And just like we've been talking about on the euro, same thing goes for gold. We have that big strong leg leg to the downside, we're probably going to see that secondary leg. And that secondary leg pushed us into that break-even point, along with the fact that, well, a lot of sellers are exiting, so there's not really many sellers left. Sellers who sold into this bounce, they're going to be exiting down there. The only thing that's left is a possible swing low trap, and that's a little bit further down. And that's where a lot of the rest of the buyers who already aren't in are going to be looking to accumulate. So that is going to be the next area of interest that I'm keeping my eyes on for a potential bounce, and that's going to be at around 18.3 or preferably a little bit under it. You know, see it go to 18.2. Sometimes that one tick can make a pretty big difference, because then we're actually physically trapping underneath that low, and that might be all we need to see before it's off to the races back to the upside. So as it stands, we are still in bear mode, but we're running into a lot of support. So I'm not anticipating the market to go flying lower like we have seen over the past couple days. The more likely anticipation is that we're going to go into more of a range. So I'm looking to go into range mode, buy low, sell high, with a slight emphasis on selling high until we can get down to 18.3, where then my interests will kind of shift back towards the upside. Over on crude oil, we are breaking back down to the lows. We broke underneath that previous level of support. That's at 60.53. And if we look at that as just a flat swing low, that's just a little bit further down at 60.13. And that looks like it was more favored by buyers to come in there instead of just the low closes. Now, to be fair, the low closes, we were watching these back here to see if we found some bouncing. But just in case, a lot of times those support and resistance levels will come in once again. It looks like they pre-bought it a little bit ahead of a miss, and then this time around they just broke through it. Next major area of support is that swing low, which does look like it's trying to hold. And of course, if we can get one more push, let's make this a purple color here so we can keep these separate. One more push would give us another large area of support just below here. And this is that swing low after the big old rally to the upside. That's kind of the last line in the sand, and very frequently, like we talked about yesterday, when you have a rally off of the lows and the market comes back and forms a higher low swing, when it dips underneath that and kind of traps it, that's usually where you start seeing it start lifting off again. If it breaks through there, then you're probably going through the low. So this is kind of the line in the sand. If they can break through 59.72 with some conviction, we're probably going back down to around 58. If that holds at 59.72 to 60.13, these two little kind of swing low zones, then we should be okay to find some more bull lifting to the upside. The same sentiment is going into crude oil that we have with gold, in that we have a decent amount of bear pressure, but we're running into a lot of support. So with that large support in the way, I'm going to be leaning more on the range side of things, looking to buy low, sell high, with more of a tilt to selling high, but just a little bit. You know, if you had to put it on a percentage scale, it'd be like 55 versus 45. And the only reason I say that is because I really would like to see 59.72, and right now we're holding 60.13, but depends on how that reactionary bounce goes. If it's only one candle and then the sellers start piling back in to drive it down again, it's a different story than if this just goes flying higher. So kind of waiting to see what the reactionary bounce looks like in another hour and a half, hour and 45 minutes when this candle closes. That'll give us some more clues. But looking for 59.72, and until we hit that, I'm going to be looking at this more along the lines of range with slight sell emphasis until we get down to that point. And then finally, the S&P. The S&P catching a very nice rally at the end of the day here to continue that lift to the upside that we saw from yesterday. We had that lift to the upside. They filled the gap from the ETH session. That gap was filled back there. And actually looks like they ended up using that as somewhat of a level of support there. So we had resistance, closed above it, used it as support, and we're still continuing higher. Very strong, very persistent bulls. There was only a single bear bar over the past 2 days, if you exclude the two gapping candles after that big gap down. It's been nothing but bullish ever since then. So normally when we see that kind of persistent strength, the very first pullback likely leads into a secondary move up. It's the same thing we saw back here. Very persistent bullish movement to the upside, very persistent bullish movement to the upside. That first pullback that occurs usually gets bought and pushed back up, usually gets bought, pushed back up. Probably going to get bought and pushed back up. So I'm looking for the overnight session to be bullish going into the evening, into morning session tomorrow, with primary objectives going into tomorrow's trading of being at the wedge highs. That's really the big objective that I'm looking for, to see if they can kind of complete that area. If they're able to, I mean, given that there is a lot of fundamental stuff going on, we might be able to see a little bit more lift through that. Now, as far as the indexes goes, you know, if you compare the S&P to some of the others, like the YM, the YM has a very similar situation. It's a little bit more range bound, not really a whole lot going on there. We're about halfway from that big top to big drop. But if we look at other markets like the NASDAQ, now we start seeing a slightly different picture. The NASDAQ is almost back to record highs already. They're sitting right on top of 7,000 as we speak, and 7,000 has been a monstrous area of support or resistance. And this is actually a really good example of a head and shoulders pattern off the highs acting as continuation. Continuation meaning that buyers don't want to buy it here, they want to buy it on a deep, deep pullback, and we go lifting higher. Primary objective on that type of formation is back to the highs and further. They usually go another 10 to 15% through that area before we start finding a little bit of pause. Now, this has been a very volatile area, right? We have a big push down, a secondary push down that failed, huge rally to the upside, and by far the NASDAQ is the strongest out of the indexes, again, currently sitting right on 7,000, and very little to go until we're back to record highs again. Record highs, we just have to go another 40, 50 points until we're there. So, I mean, out of all of the index markets, if you're looking for a strong rallying market, I think all eyes are on the NASDAQ right now. All of the tech sector markets and the NASDAQ as a whole are just locked and loaded and ready to aim at those highs, and they are ripping. Now, if we use the NASDAQ as sort of a comparative feature to the S&P or the Dow, then we might be able to say, well, the S&P and the Dow might just be lagging behind a little bit. We actually saw the inverse of that, where the S&P and the Dow were at record highs, the NASDAQ was not. And then it caught up and went flying higher, and now it's the strongest market compared to the other two. We may see a similar situation, but inverted, where the NASDAQ is leading the pack, and the Dow and the S&P are looking to follow along. They just haven't caught up yet. And if they do catch up, those might end up being the strongest markets 3-4 months from now. So that is something to kind of keep in mind. The NASDAQ is definitely leading the pack, and the S&P and the Dow both look pretty strong. The S&P looks second best. The Dow is a little bit lagging behind. And we might be able to kind of utilize that as a forecast, if you will, for the next couple months on what to expect to the upside, with the S&P and the Dow catching up and really hitting those rally mode back to the upside, targeting 2880 and maybe a little bit further. Something to keep in the back of your mind. Now, that's going to do it for the outlook. In terms of tomorrow's news, we do have a couple things to worry about. Non-farm payrolls. A little bit of some pretty big news. Yeah, we're not going to try to cover that one up. Pretty big news going on tomorrow. 4:30 tomorrow in the morning out of the UK. We have the manufacturing production month over month for January, forecasted at 0.2%. At 8:30. That's the big one. We've got non-farm payrolls for February forecasted at 200,000. We also have the unemployment rate forecasted at 4%. The previous was 4.1. So we have some huge numbers coming out tomorrow at 8:30. And a lot of times on non-farm payroll days, it is a very choppy, sloppy, messy type of day. And a lot of traders like coming in early, sometimes even before the news. Think European Open. Get the trades out of the way, wrap up, and call it a week. So something to keep in mind tomorrow, maybe a little bit gross after 8:30, maybe going on 9:30. Maybe the market open will get a little bit of volatility, but probably going to be an early in, early out kind of day with the non-farms looming. So I have to wait and see what those numbers come out as. But as always, like we always say, doesn't matter what market you're trading, always, always, always make a plan, trade the plan, follow those rules, and you'll do just fine. Until the next time, we'll see y'all then.